Shares of Ola Electric took a sharp dive early in the day, but they didn't stay down for long. After trading in the red for the majority of the session, the stock bounced back, closing 4.5% higher. In fact, the stock saw a near 10.5% recovery from its day's low, finishing at Rs 114.58 on the NSE. What caused the early pressure? Well, today marked the end of the 1-month lock-in period for anchor investors. And when that happens, it can lead to a flood of shares hitting the market. For context, the lock-in period in an IPO is usually 30 days for half of the anchor investors' share and 90 days for the other half. So what should you do with Ola Electric now? To help us figure that out, we are joined by Mohit Gang, co-founder and CEO at Moneyfront. Mohit, thank you for giving us time here on News 9. Interesting day for investors of Ola Electric. The stock fell almost 5.5% and was trading deep in the red for the majority of the session. But in the afternoon trade, it bounced back and ended 4.5% higher. But if you look at it, the stock is still down somewhere about 27% from its record high levels. What's your take on Ola Electric? Buy, sell or hold?
I recall, I think we had a discussion around it during the IPO time. And at that point, it just got listed at that day. And I actually was thinking back that I came out and I said, ki, look, people can just wait for a few days because it was an upper circuit continuously. I think it was hitting the 20% circuit and all. I said people could just wait for a few days and make some good amount of money and then perhaps take a call out from the store, honestly. And though I felt bad about it, having watched the stock go all the way up to whatever levels it went. But look, finally, market is a great leveler. Market is a great leveler, and stock market at the bottom of it, in the short term, could be a emotional game or a momentum game, but in the long term, it is always a fundamental game, right? So I think that's kind of catching up with the stock. The fundamentals, honestly, are not that great for a short-term investor. If you're a very long-term investor, you're looking with it at a 5-year time frame, then yes, be with the stock and face the cycles. They have good expansion plans. They have good capacity increase plans. They are branching out into few other vectors. So all that might just play out. But as of now, standing today, honestly, I think the balance sheet strength is not there. They are bleeding chips, right? So though the founder is extremely confident that pretty soon they will be EBITDA at an EBITDA break even, right? PAT profitability is way above and cash profits are way down the line. Honestly, I think I read somewhere, I'm not sure how accurate the data is, but per minute they're losing almost 30,000 rupees, right? So which is a big number. My sense is for fundamental investors, it is not a game right now for the short term. It is a long term game for sure, but by then competition will also heat up, right? So you have to be extremely mindful and watchful of the competition in this segment. There are players with deep pockets and deep rooted distribution and service networks. Look, Suresh, it's easy to come out with something innovative when you have the good R&D spend and you are a young go-getter. But to set up a mass distribution in a country like India, where servicing is paramount, that will take a lot of hard work from Ola folks. And if they can get that thing going, honestly, then it becomes a player to reckon with in the competitive landscape of India. But if they lose plot on the servicing and distribution front, then I think it's going to be a tough battle ahead. In spite of whatever innovation and research they pump in, I still think they need to work on few fundamental things first before becoming a formidable player.
Okay, Mohit, speaking of the competition, Ather Energy, which is backed by Hero MotoCorp, has filed the draft red herring prospectus for its IPO. Now, could that keep Ola Electric under pressure, in the days to come, since a big competition of it is vying to enter the market?
Look, honestly, competition was always anticipated in this, right? So, getting into EV segment, honestly, we have travel platforms launching EV buses now. So, anyone and everyone was wanting to get into this segment, and established players, you will definitely come into it, right? So, and if Hero wants to get into it with Ether, they have the mass distribution, they have the brand, they have everything going in for them, right? So, I perhaps to some extent maybe the competition factor can play, but I think the bigger trigger is, as you rightly pointed out, the lock-in period getting over. Some 18 odd crore shares are up out of lock-in today, and that could be a big trigger. Maybe the stock will find some solace around 100 odd rupee kind of zone. And honestly, I'm not the right guy for it to comment on it. But my sense is it's more a long term play right now. I think
Hmm.
EV as a segment got the prominence, got the limelight, they got the tax benefit and SOPs and everything, and everything is now under scandal.
Hmm.
Even the tax benefits and the incentives around it from an investment perspective and from a buyer perspective, as in from a corporate
Hmm.
perspective and from a layman buyer perspective, are both slowly going off, and perhaps over next 2 3 years will completely go off, right? So companies will have to be self-sustainable, and investors will have to get into EV looking at the overall pros and cons, and not just because of tech shops, right?
Hmm.
The infra of charging and batteries and other things have to be in place by then. And my whole hope is that in next couple of years we will find a lot of answers to all these things. Till then, honestly, I think it is for bravehearts to enter this segment. But honestly,
Hmm.
the bigger amount of money is made where the risk is higher, right? So if someone has the wherewithal to take a punt, then perhaps yes.
Hmm.
But I would still want some amount of more clarity on the fundamental front before getting into these segments right now.
Mohit, I remember reading an article back in the day which argued that Tesla should be looked as a tech company instead of an auto company. Does the same argument hold for Ola Electric and Ather? And should they be viewed as tech companies rather than traditional auto manufacturers and thereby seek higher valuations?
Look, they're already seeking that. They're
Hmm.
already seeking that. Honestly, I think if you see companies across, and I don't know what's the right example for it, ICSA Direct or ICSA Securities in the erstwhile form couldn't ever get the kind of mileage, or what do you say, valuation per se, which was given to the tech-enabled broking platform or tech-enabled wealth tech platforms, right? A Zerodha perhaps or a Grow perhaps would command much higher valuation, right, than what an ICICI Direct could ever. But their tech was fantastic. Mind you, they
Hmm.
were always great. The digital platform never conked off or gave any problems to crores of users which were using it. But still, they were never considered as a tech player in that industry, right? And perhaps that's one of the reasons that the stock could never command that kind of valuations. It happens it, and across the industries, if you see, there are multiple players. You will find some players finding more valuation because of the uh, so-called tech proposition which they are good at promoting, or perhaps they also have it, right? So
Hmm.
yes, you are right to an extent that Ether and Ola will be treated differently by the
Hmm.
industry, will be viewed from a different lens, because obviously till date we see Tesla being separately bracketed out in the overall auto industry, right? So there's no reason why these two will not be treated separately. But markets is a good leveler in the long run.
Hmm.
In the short
Hmm.
run, yes, obviously you can promote your own identity, but markets will uncover you in the long run. And if you're not genuine in it, if you're
Hmm.
not genuinely a tech enabled company, and if your R&D expenses are not that high, if you're not innovative enough, honestly, it will get called out. It will get called out in the market pretty soon. So yes, to start with, the valuations can be definitely higher than the traditional players.